Yo, what's up, guys? Welcome to another live stream, 60-second alpha, where you get all the alpha. We talk about this market before it takes place. Make sure you subscribe, hit that like button, turn notifications on, share this message with people who are struggling in this market who could use this video. Let's dive right in, guys. The charts actually don't look that bad. I mean, there's a few things that personally I actually want to happen before this market really takes off. So we're going to start on the daily chart here, guys. The daily chart looks actually pretty good. No new lower low. This is the 4-hour chart. Momentum is actually picking up in a divergence. This is good. Let's actually zoom out here and let's talk about the weekly, and then we'll just head down the line because that's all we really want to know, right? Is this market going to pump or is this market going to dump? I'm going to tell you guys. So momentum indicators actually look pretty good. They're not that bad, not yet, especially on the weekly time frame. This MA ribbon that we're still kind of just chopping around, we're going back to test the 50. Okay, now here's the thing, guys. You usually spend about 2 weeks at that 50. Notice that we actually spent 2 weeks at that 50. We actually hit it a few weeks prior here back in March of 2025. But really, we hung around there for like 2 weeks before we had our next leg. We hung around here for about 2 weeks before we had our next leg, right? So I would expect this week to kind of just hang around here. In fact, I actually do want to close closer to around 101, 3, or even 101, or even 100,800 dollars. Like that for me would be a good close. And let me show you why, guys. So yesterday we were talking about the death cross, right? The death cross is when the 200-day moving average moves above the 50-day moving average. And remember, we're talking about how those are actually lagging indicators, right? If we get a death cross, typically what that means is that the market has already made its move to the downside unless this market cycle is over, right? So we're going to just go along on the theory that this market cycle, it's not over, guys, you know? So here's our death cross coming in. We want the 50 to cross below the 200. Okay, that'll confirm the death cross. Remember, what we spoke about yesterday was that every time we've gotten a death cross this cycle, okay, it marked the low, right? We can go back further and further. Death cross, mark the low, right? So we know that these typically mark lows, okay? The problem is that is this going to mark a low or is this going to be the start of the next bear market, right? That's really the question we're trying to figure out here. And there's a few clues when it comes down to indicators, momentum indicators of what is, I think, actually likely to happen. First things first, guys. We're getting back down to our local low, right, which is around 100,000, right? We have been closing in this zone for the last 5 days. Okay, this is an important zone to hold, right? The $100,000 to $101,000 Bitcoin price. Now, here's where it gets really interesting. We're actually getting a divergence, okay, on the MACD with the signal line and MACD line actually going down. Okay, this is bullish. Second thing, if we can close, okay, below, anywhere below, you're like, wait, why is closing below a certain level bullish? Well, let me show you. If we can close anywhere below, really, a daily close below 101. So 101, 103, right? Preferably below 101. We'll actually be starting to confirm somewhat of a daily bullish divergence. Now, daily bullish divergences on Bitcoin are not common. Okay, let me pull this up here for you. Daily bullish divergence, if and only if we can get that close below 101. Okay. Now we don't need a daily bullish divergence for this market to move, but it is just more confirmation that likely bullish continuation towards our MA on the weekly, towards our death cross, right? Bullish divergence on the MACD, kind of obvious. This is way more obvious, right? And we're starting to confirm somewhat, possibly, hopefully, a bullish divergence on the daily chart on the RSI. I mean, guys, you know, and again, I want to be clear here. Part of me just can't get behind the idea that this market cycle is over. Now, this doesn't mean that we need to pump to new all-time highs within a week, right? It doesn't mean that we even need to necessarily make a new all-time high this year. But what it does mean is that we're going to have large buyers stepping in, whales continuing to accumulate, retail still getting shaken out just by impatience, right? From the lack of altcoin movement. And then eventually, after consolidating this $100,000 range for about a year, we start our next leg. Now, I've been saying this for a while. I said even last night, again, I can see a world where Bitcoin just consolidates between 100, 95, 100K, 110, 115K for another month or two, right? We're talking about uncertainty in the market when it comes to, okay, the government's still not open. It should be passing today, but it's still not open. We're still talking about how the rate cut probabilities have dropped from about 92% back in October to around 67, 65% today. So the market is spooked, right? Because the Fed, people in the Fed are not really convinced that we need another cut. Now, I am convinced we need another cut. And I think this is a lot of politics, right? But I do believe that eventually, at the end of the day, the Fed will capitulate to the 2-year yield. And that is 50 basis points lower than the Federal Reserve fund rate today. So, yeah, it's scary. I know. We're still in extreme fear, right? Which, in my opinion, is good. Okay. We're still at that 4-year, stopgap in terms of, well, the cycle should be over. Whales are unloading. But yesterday we had $500 million in inflows for the Bitcoin ETFs. Now, if these inflows can sustain, all this selling pressure will be absorbed. And that's what we've seen in the past, actually, that these ETFs start to step in at these lows, these major moving averages, these major levels of support or resistance. It's turned into, it was a retail frenzy. Now it's really kind of just turned into institutional market play, right? And they love these psychological zones, and they love these run and bumps, these major pullbacks, these major legs up, these major pullbacks to local levels of support, high time frame support and resistance, and then movement in the market. This is how the stock market functions. This is how many major indices function. Okay, so this is not unusual at all. In fact, it really makes a lot of sense. Now, here's the other thing, right? When we launched the Bitcoin ETFs, we actually hit an all-time high before the halving. That didn't happen. That's never happened before. It didn't happen last cycle. Okay, typically after the halving, we have this huge expansion phase. We haven't gotten that yet. We haven't even 2x'd from the halving date. Okay, that has never happened before. We've had no alt season. We've had a restrictive monetary policy. All in the meanwhile, in the background, we have altcoin ETFs launching. We have banks and institutions quite literally integrating. We have major dApps being launched on major chains that are actually functional, that have utility. Like, everything we could have ever wanted for crypto is taking place right now. And I think the uncertainty of this 4-year cycle thesis, which again could turn out to be true, I don't think it is, combined with that huge October 10th liquidation event for altcoins, combined with no social interest. I mean, there's a lot of factors that just kind of show that this is not over to me. I mean, we've had no euphoria phase. Guys, we've had no retail come back into this market. It feels off. And I think that feels off because Bitcoin is actually going through a major distribution phase. And we've been talking about whales unloading for a while now, and they have. The great thing about the whales unloading into this market now is that there's buying pressure from major institutions. People who have a lot of money, a lot of whales are just sucking up this supply that's coming onto the open market and actually taking their coins off exchanges, which is going to create some sort of supply shock as soon as things really start to turn around. Guys, this market selling pressure is just being absorbed. It just is. We would see a rollover way faster if it wasn't. Now, again, I want to keep your expectations tempered. I am not one of those people that are saying that we'll be at 150, 200K by the end of this year. Right? I've never been that guy. I'm not the one that's saying that alt season is just going to start as soon as this correction's over. I still don't think that's necessarily true. But what I do think is that we get movement in the Fed. These whales stop unloading between 120 and 100, $100,000. We are going to see major movement. And one of the signs for this position or disposition in the market is actually the Bitcoin dominance chart. Believe it or not. This is actually telling us quite a bit, especially of what we need to know. And that is very simple. Dominance could be putting in a top here, especially a local top before another major move to the downside, before we get any move back to the upside. What that looks like in practice, guys, is really simple. First, we have a major macro inverse head and shoulders with wicks, by the way, showing the indecision and the scare in the market at certain times. They're getting rejected from what was once high time frame support, losing that support into resistance with these wicks. Now, if I even went to I think if I went to the weekly chart, it'd be even more pronounced. So let's do that. This is bearish, guys. This is not bullish. This is bearish. And what I could see happening here, let me get this a little bigger for you. We're breaking out of our wedge. We had a major doji reversal wick last week. And we're starting to possibly break down, confirming somewhat of this inverse head and shoulders, and this is high time frame resistance. Like, this is bearish, guys. Like, I know it seems crazy that this market could just go ballistic between now and, let's say, January 2026. But the charts, at least for now, Bitcoin dominance is telling us this. We've made our major tops so far for 2025. We haven't reclaimed any high. We're headed in 2026 into looser monetary policy. Meanwhile, the others chart measured against this Bitcoin pair actually bottomed. Right? And people go, well, how do we know that this is actually kosher? How do we know that this is something we can trust? We don't, but we have a lot of signs. And I want to say something really, really clear to you guys. The others market cap, so everything outside the top 10, I think is like not even 5% of the market. Like the top 10 or something like that, minus stable coins, right, is like 90 to 95% of the market. So if Bitcoin dominance is rolling over, that's just showing that's showing relative strength in Ethereum and the top 10, not necessarily the altcoins yet. Okay, but we know that if ETH shows strength and altcoins show strength, I get these major, especially ETH, right? If it shows any strength against this Bitcoin pair, that will be mirrored in the Bitcoin dominance chart, and we have. I mean, we're still consolidating our flag pattern here. And I am calling for a major breakout as soon as we're done. So things don't look bearish in my mind, not in the slightest. In fact, it looks really bullish. So yeah, I mean, we're just kind of waiting here. There's really nothing we can do. I want to also kind of go over maybe some trading setups. We're going to start getting into trading a little bit here. I think that's useful for you guys. And also, besides a little bit of trading, I think we should talk about the news, the news cycle a little bit more, and we will. We'll get into all that. We're going to do 2 of these shows a day, but at least we can start trading now. I'm not taking any longs. I'm not taking any shorts. Not yet. Okay. Right now is really no man's land. We're consolidating. It's really choppy. We're not really getting any volatility, but there are a few zones that I am looking out for. It's actually really, really simple too. Like you guys will love this because it's the same indicators we use most of the time, right? So we're going to pull up volume range profiles, right? Make this a little smaller so we can see everything. Boom, boom. Okay. And we're going to pull up the RSI. Now, this is one of the things, this is typically actually when I do trade. And guys, by the way, if you're going to be day trading, don't be trading altcoins. Telling you it's so much easier when you have less volatility with large positions to call this market in something like Bitcoin. It's just way more predictable. It's way more responsive to just intraday volatility, sentiment, not, these huge major swings. I don't use high leverage. Okay. No 40x, no 20x, not even 10x. I barely ever go above 7x. But this is a time, this is a time where I might actually take that trade. So here we go. Here's the setup that we're looking for. And we might not get it. And that's okay because our spot bags are packed, right? So we don't really care. But if I were to be taking a trade, the trade I would be taking is actually this move back down to the POC, around $95,000. Assuming that we can actually get a lower high or a higher low close on the RSI, the daily RSI, to confirm this bullish divergence that could be forming if we were to start to be closing in that range. Oops, my volume range profile moved when I moved the computer. I'm sorry. Right, so this is a trade I would take, especially if we came in and we bounced with high volume at that 95 area. I would take this trade right back all the way up to all-time highs, no question. Of course, I'd be having my stop losses. I'd be having my take profit zones. But in all honesty, this is what I'm looking for. Now, here's another thing of confluence that I actually haven't checked. But let's see where it's at today. Major high to major low. We're around the 0.5. So yeah. So if we were to actually stab on any given daily time frame, okay, down to that 95K, 96K area, it's actually around the golden pocket zone as well, $94,000. Like, to me, this is just a confluence trade. Now, you can get extremely wrecked. There's a lot of people that are calling for like 85K, 74K. I just don't think we get there. I think, honestly, this correction is probably over. It'll probably be over the next week or two, right? Because we were talking about the MA ribbon on the weekly and typically how long we actually stay on that 50 MA. So I think we'll have an answer pretty soon. But this is a setup trade that I would most definitely actually take. And I'll be telling you guys if I do. We'll be making that public as well. We are waiting to see what happens in the stock market, right? It is the NASDAQ gonna go into a small corrective territory. We got a nice wick before last week. The chart actually looks really good, to be honest, too. I mean, I don't see, we're not in any sort of like danger. No major moving averages. We're getting rejected in this zone, which makes a lot of sense when you actually pull out level support resistance. This is our second gap zone, right? So of course we're struggling to reclaim, because if we do reclaim, the market knows that we're going to go to new all-time highs. I mean, it's almost perfect, right? So this is a struggle to reclaim. That's what this is. Now, if we can get a breakout on the NASDAQ here, we're likely headed to new highs. Here's another interesting factor. Dow Jones, all-time highs today, right? SPACs, near all-time highs. Fourth green day in a row. And we did actually break out of our nice trend. We found a reversal back around the POC. We broke through, liquidating, finding more support at the next largest volume range profiles. Like, this just looks super technical to me, guys. So as long as the stock market can hold up, we're in good shape for sure. And gold. Here's another factor. Gold is actually going on another bounce tear, right? If gold actually makes a new all-time high, I expect most of the market to kind of go on hold until this slows down. So thesis remains the same. I am not being shaken out of this goddamn market. There's no way. And I don't see anything that's, so urgent that we need to just drop what we're doing. Fib levels are being respected, guys. Like, this is beautiful shit. So sure, could we come back down to 95, 96, 94 area? Yes, we can. I think if we do, that is the major low. I'm really not thinking that buyers don't step in at that level. If they don't, we'll have to reevaluate for sure. But I really, really do think they will. It just makes no sense, again, that retail would be crushed the way they are, have the cycle be over after we're getting that liquidation rinse of open interest in the altcoin market, specifically meant to make it so none of you actually win when we go on a tear. Okay. I mean, I've seen this movie before. So, I'm not concerned. Not at all. This bloom is so fucking fire. Do you guys want to do any Q&A? We can. If we do, let's do it. Dave, you're a TA guru. You know so much more indicated. Yeah, to be honest, all these traders selling, yes, just scamming. No, I mean, yeah. So look, here's the thing about, I don't know. So I think a lot of people in this market do believe they're right, and just like I do, I believe I'm right. Right? I'm okay and willing to admit that I'm wrong when I'm wrong. I think that is what makes a good trader for sure. Is what makes someone, kind of worth following. Just humbled. I've been humbled by this market a million times, and I am going out on a limb to say that this market cycle is not over. I think a vast majority of people do think this market cycle is over. That's okay. I'm taking the other side of that bet, but one of us is going to be right. So I don't think it makes you a bad trader. I don't think it makes you a bad investor. It doesn't make you bad at reading TA. I think that everybody has their biases, natural biases. They have their indicators that work for them. And sometimes you're right, and sometimes you're wrong. But for me, I'm more of a macro guy. Yes, I know how to trade. Yes, I know how to swing, trade, scalp. Yes, I don't do it very often. I'm not the best at it. I have a winning rate, but I'm not the best at it. But what I am really good at, I think, we'll find out, is actually understanding the macro factors of what drives, markets in general, right? And that is many layers deep, and it's complicated, and it's not straightforward, and look, if I knew everything and whatever, then I would be rich, and I'm not. That's just the way this is. But I do think I have a better finger. I have my finger on the pulse better than a lot of other people. That's just my opinion. I haven't been doing the social media thing very long. Definitely starting to finally get my business off the ground. I sell courses, right? I sell trading courses. That's one of the things that I do. And the reason I do it is because I believe everybody would benefit from taking it. I do. I like to remind people that I've lost so much money in my first cycle that really I had no choice but to learn. And that if I had someone that could at least show me what technical indicators mean, how to use them, and then you can kind of have your own style mixed around that, I would have saved so much money and heartache. And, there's a lot of times where I was shooting myself in the foot, feeling like I had to protect my capital in a way where I wouldn't even invest in myself. It was like, I'm just going to invest in this market, hope number go up. And well, if it doesn't, it's the market's fault. It's like, no, you really should be taking the time to learn, and so I offer that. And it supports me, right? I used to work as a bartender and a waiter, and I've had a few, white collar jobs, blue collar jobs in my life. I hated all of it. I finally was able to kind of get out from under that last January. And, I'm finding passion and purpose in what I do now more than I ever have. And that is the most important thing, I think, if you're going to follow anybody or partner with anybody or listen to anybody or whatever, you want to call this, make sure that they actually are passionate about what they do. I'm not on here to make a quick buck. It is nice to be supported by my community. It is nice to be able to connect with my community, with our community. It is nice to be able to build a brand and have other people be a part of it. This is a journey that I If I were on this alone, it wouldn't be half as fun as it is with you guys here. Anyway, I've been, people have been telling me to make a Discord. I got comments right now to make a Discord, to do all these things. And it's hard when it's just me, right? I have a life outside of this. So it's hard to do this just when it's just me, but I'm starting to realize and understand emphatically that if we want to take this to the next level, I got to do it. So that's why I'm doing this. I'm doing these live streams. We're trying to rebrand. I'm trying to rebrand. I'm trying to figure out a way to get these courses in your guys' hands. That's why I'm only doing it for $1,000 now. You get to keep it for the rest of your life. It's like 21 hours of instructions on how to trade and read the market. Like, I'm looking at other people's courses and I'm thinking, I give you guys so much more. It took me like 6 months to make that course, right? For $1,000. Like, I'm looking at other people doing like $5, $10, $15, $20,000. And there's a time and place for that. I think that there is a time and place for that. But right now, like my introductory to trading course, that's my bread and butter. That's how I'm actually making my money. It means a lot to me when you guys buy, because I get a feeling of satisfaction that I'm helping, and I also am supported by you guys. So it's a lot deeper than just slanging courses. This is what is enabling me to actually do this as much as I'd like to. The Discord passive income, yeah. Do I have time to manage an X account, a YouTube account, look at charts, create content, and a Discord, a paid service so you guys get your money's worth on top of a trading course live and not at the same time? I don't know. Maybe. Probably should be doing it. I need to build a team. I've had people reach out, say they want to be a part of this, and then they don't. And that's okay. I got to find the right people. So anyway, yeah, that's how I'm feeling about that. Yeah, the stimulus check. I see a lot of people talking about these stimmy checks that could be coming out. Sure, if it happens, that's great. We'll have to wait and see if it actually happens. I think Congress has to pass that, but maybe not. Maybe not, because of the way it's actually that revenue is being created. Yeah, I mean, quantitative easing is going to be bullish. I think the question is, at least in my mind, is do we have like another 3 to 6 month cool off period before that liquidity starts to hit the market? Right, that's what I'm struggling with. I don't think this market cycle is over. I don't think altcoins go in another 4-year bear market. Like, if you fucking believe that, you never made money in this market. It's not that simple. I mean, it's just not. And you can see, like, we're already a year behind. Like, this should be the blow off top moment for altcoins, really. We haven't even started. Bitcoin dominance should have rolled over like a year ago, like 9 months ago. It hasn't even started. Not really. It's not confirmed. Bitcoin's been consolidating the same range for a year. Like, crypto, this is not the typical crypto. This is very, very, very different. And when I just think about what's coming down the pipeline, what institutions are doing, what the government is doing, it's like, guys, like, there's no fucking way you're going to get another chance to buy Bitcoin or altcoins at like 60K, 70K. I just don't see it. I mean, look, I could be wrong, and I'll be majorly humbled, and I'll admit it, and I'll be happy to move on. Like, okay, not the best call I would have ever made, but I'm willing to put my reputation on it. And again, I think if I'm wrong, it's like, you learn, right? I was showing you guys this trading clip. There's the top traders on crypto YouTube, or on crypto Twitter, who were trading in the synthetics competition. And the top, like, only like 1% of them were actually like making money. And these guys are the top traders on Twitter. I'm telling you, it's a lot more complicated, a lot harder than you think. Be very, very careful of people who post P&Ls and talk about how they know everything. I mean, it's just not true. The market will humble you eventually. Now, I've been very lucky to make money over the last few years. Maybe I get this one wrong. That's okay. It is what it is, but you move forward and you move on, and you learn from it. Anyway, selling and buying back in never works for me. Never. Yeah, it's very, very difficult to do. You're trying to time the market. Now, I think there's a macro timing you can have, right? Like where Bitcoin's at right now. If you're going to be buying, you should be buying now, right? Altcoins, I think looking at the altcoin sector, assuming you're ready to hold another 3 to 6 months of pain or whatever the case may be, like we are at a macro bottom. Now is the time to be buying altcoins for sure. A lot of traders or a lot of investors will do one of two things. They'll like try to time the bottom perfectly. Usually that gets them wrecked. Or they'll try to accumulate range lows, and that range lows can play out over like a year or two, and they just get impatient and they capitulate. Right. So neither is easy. So yeah, I mean, really, the most money I've ever made is from buying and holding spot at macro lows for sure. And then DCing on the way out. Right. So that's that. Usually 6 months after pivot, markets rip. Yeah, I mean, I could see that happening. I know it's happened. It's in the charts for crypto for sure. But the amount of liquidity the amount of money they'll have to print. What I fear is this. Well, not what I fear. Here's what I think. I think the market's going to front run the liquidity, knowing what's happened to risk assets last time. That's always a possibility. Um, you know, I'm reading some of your comments here. I'm trying to think of like what we should really start to, oh yeah, MicroStrategy, right? That's another thing. MicroStrategy is in a bear market. So Bitcoin is going into a bear market. MicroStrategy, I don't even think is in a bear market. I think it's just had a nasty like 6 months correction. Let me see. Let's check it out. Yeah, it's had a nasty 6 month, well, not even quite. What's July until now? So 4 month correction. Pretty typical of their correctional period, I think. Yeah, it's about how long their corrections last. So we could be coming out of the tail end of this for sure. It lost a major trend that it held for a while. Okay, here's a volume range node back at our large. This is high time frame support. I wouldn't be surprised to see MicroStrategy run it back down to this zone here. That's fine. Make another lower low, confirm some sort of a downtrend, and find major support. But this again can happen in the next month, 2, and then we bounce. I mean, it's possible, right? So, and I think there was a lot of shorts that opened up on MicroStrategy that got closed today. I was reading an article on that today. Some guy had more than a few billion dollars short open since like over here. He crushed it. I forgot his name, but he closed a short today. These are things this is just short selling. This isn't necessarily market selling, guys. This is Wall Street fuckaroony 101. So you're not into scalp trading too much, but can you show us a quick scalp strategy that you find to be successful if you want to make a quick trade? Yeah, sure, I can do that. Let's look at Bitcoin. So without going too much into this, because this is what the course is for, and this is what I want you guys, one of the reasons I want you guys to take it, right? Because it's not simple. Something I am always looking at is first I'm looking at the higher time frame, right? I'm looking at the momentum indicators. I'm also looking at the fib retracement levels. Around that 0.5. Typically we get a nice bounce and a reaction off the 0.5 before we stab the 0.618 if we do. Okay. We've gotten some nice reactions here. We got rejected out the 382. We'll know sooner than later if we're actually going to stab through this or not. Okay, so this is not necessarily a trade I would take right now, even if I were scalping, right? And I don't scalp altcoins, not really, not unless we're in a major macro uptrend. Okay. Then I look at the 4 hour, right? I come in, I put on some moving averages. Typically, I'll use the Gunner EMA. Okay. And I'll say, okay, well, what's this EMA doing? It's curling down. Okay. Likely continuation downside. We actually just got a bearish cross. We're finding some support at the local POC. This is where we've been consolidating for the last few weeks. Okay. Well, what's the RSI doing then? Because if we're going to bounce, we'll probably get a bounce here. So then I'll put on some momentum indicators. Just giving you guys a rough understanding of what I do. The RSI actually broke trend. Not good. Okay, we had a fake out here. This was a fake out. Broke back trend. Okay, so that's something to consider. What about the 1 hour? Where's the 1 hour at? This is the 1 hour bullish, right? using some sort of volume range profile as well, having my fib still up, knowing that we could be bouncing between here and here, understanding that, okay, well, there's a slight bullish divergence, right, on the RSI. Okay, that's good to know. This is on the 1 hour. We are underneath our MAs, our Gunnar EMA. Okay, so maybe I'll go down even more. I'll go, well, what are we doing on a 30-minute chart? How's that looking? Are we crossing? We're getting rejected by the Gunnar EMA. So nothing really bullish is showing up yet. Okay, not yet. We are oversold. We were oversold. We are headed back up in some sort of upward momentum. That's good, right? But before I actually take a trade, like a scalping trade on the lower time frame, I want to be above these moving averages, right? I want to be above the Gunnar EMA. And I want there to be confluence between some sort of fib level, macro support level, which there is here. We're also, this is 100, 101 area is also our low of the last few weeks, really, of closing. Okay, so it's looking like I could take this trade. Maybe I'd wait to get somewhere above these EMAs before I start to do that, right? Another thing I'm constantly looking at is my risk to reward ratio. So let's just say I were to, here's an example of that. Okay, so let's go to, now that you've zoomed out, you know, the 30 minutes looking okay, 1 hour is blah, 4 hours blah, daily's blah, 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 blah. Okay, there are some confluence between support and resistance levels and what have you. Okay, but what I'll also do, and this is why I hate, absolutely hate the trading desk of trading view on desktop. Oops. Yeah, that's what I wanted, but okay, if I am going to long here, what's my risk to reward ratio? Okay. And for me, a risk to reward ratio of 2.9. It's pretty good. Not bad. You really don't want to have any, and this is where we put our stop loss, by the way. Right? So stop loss, take profit. You can see some confluence there, relatively simple. Right? Maybe even a little lower because we did wick down here before. Right? 1.75 risk to reward ratio. Not bad. Not bad. So this is kind of my general template of what I'm using. I don't use a ton of indicators. I really don't. I don't have a whole bunch of different strategies. And I don't take a trade unless I'm pretty fucking confident in it. And right now it's like, yeah, I'm not confident. I mean, this looks ugly. Like this chop is ugly, right? We want to at least either break below and maybe short to make a new low. Start closing a 4 hour, 1 hour candle here is something I'd start to look at before I take that short. You know, there's also a case to be made that this is a bear flag. Right? We broke down. Right? Something like that. And as soon as we kind of broke and closed below the trend, take that short. See, here's the problem with that, though. We also have major levels of support here. So I wouldn't take that short either, right? Just based off that flag alone, right? It's not that simple. But if we were to start to close below this level, the 0.5, I would expect a move down to 0.6. So what I would do is I would take that short. And I would take all my profits at the 0.618. I'm not holding this shit for long. Right? Short as we break, take profit, I'm out. I'm not waiting to go down even lower. Like I don't care, right? That's not the point of trading. Anyway. All right, I'm gonna get off. This was fun. I'm glad you guys kind of asked, you know, how I would scalp. But look, here's the thing too, guys. Sign up for the $1,000 recorded course. Okay, I'm telling you, you will not be disappointed. And if you have money in this market, if you got any more than 5 to 10 grand in this market, you should be taking it. If you plan on staying in this market, you should be taking it. Okay, we get 2 community calls, private calls per month, where we're going to talk on like this on meets. We're going to be able to talk and bounce off ideas from one another. Last time we had one was like 30 people there. You get that for life, right? So you buy a course, you get that for life. As soon as the Discord and all these other things are up and running, it's all going to be a community membership thing. Once I actually turn on the membership thing on my YouTube, which I haven't done yet, I'm not ready, but once I do, you'll get that as well. So there's a whole bunch of benefit to buying the course, and you support me, right? You support me so I can start bringing these videos even more to you, right? And that is, I think, where we're gonna make a difference and learn together. Anyway, I love you guys. Have a good day, and we'll talk later tonight. Adios, amigos.